Dr. Richard Harris joining us, Chief Executive at Port Shelter Investment Management. Dr. Harris, great to have you on the show once again and speaking with us on NDTV Profit. Let's just set the scene. So the rate cut is behind us, better than expected. What's next? What's the next big trigger, and does now attention move to the US elections?
Well, that's right. I mean, the big question now is what is next? What's the next narrative that's going to come around the corner? We've had all the interest rate thing. We've had a lot of excitement in the US elections, so that's going to tick along. But there's no real big narrative out there. Inflation's coming down. You know, that's not a big story anymore. So I think what we're likely to see is the markets maybe tread water for a week or two. Very often when there's no real news, there's maybe more of a downward bias than an upward bias. But I think generally the markets are feeling relatively encouraged. You know, economies are slowing a bit, but haven't really slowed that much. We've had a reaction on the interest rate front towards that. So I think that markets, certainly global markets, are likely to stay in these sort of levels, maybe with no news, a bit of a downward bias. But as we all know, some event will come along in the near future and set the scene.
Okay, so you could see a whole set of sort of movements there. I just want to talk to you about how emerging markets in India now seem, and we'll get to that figure in a bit. But Friday saw a robust fund flow from FIIs, about 14,000 odd crores. And the sense is, and tell me if you agree with that, that you are going to see more aggressive global inflows coming into India despite valuation concerns, etc. Is that something that you're hearing as well?
Yes, I think so. And the reason is that global markets, global developed markets have remained quite strong, probably will remain, as I was saying, you know, at the higher end. And when that happens, investors tend to look for something else. You know, what's different from, say, a US fund or European fund or investing in those sort of areas? And I think the emerging markets are next down the line. The other sector people look at are small caps. So these sectors tend to be next in line. India, I think, has benefited a great deal because people don't want to invest in China. China is still suffering from its post-COVID slowdown, the issues with confidence there. So I think that India does stand out. I think that people are favoring then the smaller markets, maybe some of the smaller Asian markets too. But certainly India is really being, if you like, a competitor to China in this space.
Hi, Dr. Harris. It's also Samina joining in. Up until now, the big worry was India is expensive. We've historically been an expensive market as compared to most of our peers. Do you feel at this juncture any incremental money coming into emerging markets will drive and find its way into India despite stretched valuations, or would investors wait for a correction to add incremental money here?
I think investors do worry about valuations, but it's only one of several factors. Don't forget, it only takes a small allocation out of Western markets to go into emerging markets like India for there to have quite a big impact on those markets. Now, I'm not saying there'll be a continual flow of funds, but it's certainly a situation where people are saying, where can we put maybe a tiny part of our allocation somewhere else, which actually is quite a large amount of money for those markets. So I think that's what's helping India at the moment. People will look at valuations, but then again, look at the US tech sector in terms of expensive valuations. And people still want to put money there because there's an expectation that that's where the growth is going to be. I think the same with India. There's an expectation that the growth is going to be there. And that's what's really attracting investors.
Well, Richard, just another quick one, and I want to move away from equities for a minute, talk to you about asset classes such as gold. $2,600 got hit, I believe, late Friday and early trade across Asia this morning. Gold has had a very strong run from the start of this year, and it's not often that you find gold rallying up in a risk-on environment. At $2,600, what percentage of your allocation would go towards gold?
Well, I've been in favor a little bit of gold for a while, and I must admit I was a rather stale bear for a long time. And I think that this is what we should remember, is that gold, when inflation was going up and going up sharply, didn't really move very much. So it's been a bit of a latecomer to the party. It's catching up now to the kind of global situation that we've seen. Don't forget, gold is also reacting to what's happening in the Middle East, what's happening to Ukraine. So I think there's largely a catch-up in the move that we've seen here. So it may seem a little bit strange that, okay, we've got interest rates coming down, we've got inflation coming down, we've got more of a risk-on situation, gold coming up. But I think we've got to remember that gold is a bit of a latecomer to the party, and it's really catching up. Well, we would have expected it to have done, say, 2020, 2021 and onwards.
Just one last point, Richard, since we've talked about the interest in Indian equities, which are the kind of spaces or sectors that seem like they have a further upside remaining?
Well, I mean, your Indian experts would be better at looking at that than me. But from a global investor's point of view, one of my strategies as a country manager was always to look at what is the country good at? What is it? What is growing in the country? What's especially good? You know, in the US, it has been tech. In Europe, there are areas like luxury goods and pharmaceuticals. This is what those markets are good at. If you look at India, I think people are going to be looking at, you know, the outsourcing sector. They're going to be looking at farmers, maybe generics, the kind of sectors that India is good at and that other countries maybe are lagging behind. So as a global investor looking at India, you really want to invest in the parts of the market that are unique, special, and growing.
Thank you, Dr. Harris. Always great getting perspective from you. That's a view coming on Indian equities, the next big trigger for world markets, and a view on gold.